Good morning, you're watching Market Cafe with me, Ankita, Saxena. Well, the latest update is that the Indian-Pakistan match is always more than just a cricket match, but this time the Asia Club clash came without the usual buzz. India registered a comfortable win, chasing down Pakistan's modest total of 127 runs with ease, thanks to captain Surya Kumar Yadav's steady knock. With this, India maintained a perfect record, 6 straight wins against Pakistan in Asia Cup's history. But what really stood out was not the action on the pitch, but the empty stands in Dubai, a stark reminder of the lingering hostility after the Pahalgam terror attacks in April and India's Operation Sindoor in the month of May. The match ended on a frosty note. 2 Indian players skipped the customary handshake, prompting Pakistan skipper Salman Agha to boycott the presentation ceremony. Only Shaheen Afridi turned up, collecting the award for the most sixes of the match, a contest that delivered a result but underlined how cricket still remains caught in the shadows of geopolitics. And well, moving on then, let's take stock of how the US markets shaped up before we start trading session on the D Street. US stocks futures were little changed Sunday night after Nasdaq Composite closed at a fresh record high, with investors bracing for a crucial Federal Reserve meeting this week. Dow Jones Industrial Average of futures rose 25 points, of very flat 0.05%, and S&P futures edged 0.05% again, and Nasdaq futures added 0.05%. So very flat moves coming in as of now. Those moves come after the major averages have finished a very strong week last week. Now remember, in particular, the Nasdaq Composite closed at a record, rising 2% for its second winning week in a row, and S&P 500 gained 1.6%, posting its best weekly performance since early August. Now, the Dow wrapped up its first positive week in 3. The strong gains came in after the latest economic data showed a weakening labor market, and tame inflation spurred hopes that Federal Reserve will cut interest rates when it concludes its meeting on Wednesday. Now, the market was last pricing in a 96% certainty that the central bank will lower interest rates by a quarter percentage point, with a meager 3.6% likelihood of a steeper half percentage point cut, according to the CME Fed Watch tool. So right now, the important clue to watch is the Federal Reserve's interest rate cuts that is due on Wednesday. FOMC meet, and we are penciling in a 25 bps rate cut is what the market is penciling in. And remember, Wall Street has been on a winning streak. Last week also, we closed on record high levels on the indices, especially the Nasdaq Composite gaining almost 2% in the week. But let's take stock of how the crude is really shaping up. As far as oil prices are concerned, we do see Brent crude that's sitting at that it's $67.21 as of now. The oil also rose on Friday after Ukrainian drone attacks suspended loading from the largest port in western Russia. But gains were capped by the concerns about the U.S. demand. So as far as Brent crude futures is concerned, that is settling at $66.9 a barrel, up 62 cents or 0.9%, and WTI has finished at $62, a gain of 32 cents or 0.5% coming in on WTI as well. So that's how crude is sitting at.
The global markets and crude markets, commodity markets have performed over the weekend. But going forward now, it's a bit weak ahead for global markets as central banks take the spotlight. The U.S. Federal Reserve meets tomorrow, with investors fully pricing in a September rate cut, which will be first in this cycle. The Bank of England, on the other hand, is set to hold steady at that 4% mark, while the Bank of Japan, that is expected to keep rates unchanged. My colleague Snehi is now joining us to tell us what to expect from these global banks. Snehi, over to you.
Well, yes, busy week for global markets as well as global central banks, because you have 3 central bank rate decisions to look forward to in the week to come. Let's start by talking about the first one, September 17th. From the US, you have the US Federal Reserve, the FOMC meet outcome. That will be out on the 17th. The 2-day meeting will start on the 16th and conclude on the 17th. The current range is between 4.25 to 4.5. There's been increasing pressure coming in from Donald Trump on Jerome Powell to cut rates, and he's at the end of his term, so let's see what happens. But the big expectation is that we could see the first 25 bips rate cut of CY25. 105 out of 107 economists that Reuters polled, they expect to see a cut of 25 bips. The remaining 2, they expect to see a 50 bips cut, but all of them are pricing in at least a cut of 25 bips. The markets is fully priced in a September cut and are expecting total of 3 reductions this year. So all eyes are going to be on the commentary coming in from the chair, Jerome Powell. Moving to Bank of England then, September 18, you'll have UK Central Bank's decision expected to hold rates steady at that 4% mark where it is right now. The Reuters poll of economists says that majority of economists expect to see one cut next quarter and one again early next year. So that's for Bank of England. And lastly, on 19 September, Japan will be in focus because the Bank of Japan will be out with its outcome. They're expected to keep interest rates steady right now at 0.5%. Key to watch for their government, the governor's speech over there is going to be how soon the Bank of Japan could resume their rate hike, which was paused since January on the back of the tariff pressure, and to calibrate around that. And Reuters poll over there says that the majority of economists they poll, they expect another 25 bips hike by the year end. So expecting a cut in the US, steady in the UK, and steady in Japan for now, but a hike expected early next year. So that's a roundup on all the central bank action to watch out for this week.
Right, a lot of central bank action that will be on the radar for us, and especially the Wednesday FOMC meet that we are watching out for in the short term. But moving on then, US President Donald Trump is turning up the heat on NATO allies, saying he is ready to impose major sanctions on Russia if all the NATO members do the same and halt oil purchases from Moscow. In a letter shared on Truth Social, Trump also urged allies to slap 50% to 100% tariffs on China, claiming such a move would break Beijing's grip over Russia. Now, Treasury Secretary Scott Bessent backed the call, saying only a unified effort can stop Putin's war machine. Ukrainian President Volodymyr Zelensky echoed that plea, urging global leaders to stop looking for excuses and cut their reliance on Russian oil.
Moving on, US and Chinese officials met in Madrid on Sunday for fresh talks on trade frictions, the TikTok divestiture deadline, and Washington's push for allies to impose tariffs on China over Russian oil. Now, it's the fourth such meeting in many months aimed at preventing trade ties from collapsing under Trump's tariffs, which remain at 55% until November 10th. Now, while major breakthroughs are unlikely, negotiations may extend TikTok's September 17th deadline to sell its US operations or face a shutdown. Talks are set to resume today.
All right, let's move on to the top headlines from across the globe then. China is steering for modest but steady growth in its auto sector. A new 2-year work plan unveiled by 8 ministers targeting vehicle sales of 32.3 million units in 2025, up 3% from this year. The bigger push is in new energy vehicles, with sales expected to climb 20%. Authorities are also eyeing stronger exports. The US and the UK are set to unveil landmark agreements on technology and civil nuclear energy during Trump's second state visit to Britain this week. Prime Minister Keir Starmer will host Trump for talks, where the two leaders are expected to finalize tariff deals on steel and aluminium and strengthen defense and energy ties. The tech pact backed by US giants Nvidia and OpenAI will boost cooperation in areas like AI and quantum computing.
That's right. Moving on to the next global story that we are tracking. Now, China is steering for modest but steady growth in the auto sector. It is set to, it's a new 2-year work plan unveiled by 8 ministries, targets vehicle sales of 32.3 million units in 2025. That's up 3% from this year. Now, the bigger push is in new energy vehicles, with sales expected to climb 20%. Now, authorities are also eyeing stronger exports. Moving on, now the U.S. Secretary of State Marco Rubio is in Israel as the IDF intensifies airstrikes in Gaza City, flattening dozens of residential buildings and forcing mass evacuations ahead of a possible ground offensive. Now, Rubio has acknowledged Trump was not happy with Israel's strike on Hamas members in Qatar, which is a key U.S. ally, but stressed that U.S.-Israeli ties remain strong.
And tens of thousands took to streets of Ankara on Sunday, rallying against a court case that could unseat the leader of Turkey's main opposition party. The case challenges the validity of the party's 2023 Congress, with a ruling due today that could reshape the opposition and unsettle markets. Protesters chanted for President Erdogan's resignations, accusing the government of eroding democratic norms. Anime has stormed the US box office. Demon Slayer's Infinity Castle opened to a record-breaking $70 million weekend, the biggest ever North American debut for an anime film. Distributed by the Crunchyroll, the movie grossed $33 million on Friday alone, surpassing the 1999 hit Pokemon.
All right, moving on. Prime Minister Narendra Modi has begun his two-day visit tour of the Northeast on Saturday. He laid the foundation stone and inaugurated multiple development projects worth over 9,000 crore rupees in Aizawl, including 8,070 crore rupees railway line connecting the capital of Mizoram to the Indian Railways network for the first time. Now, this was his first visit to Manipur since ethnic clashes broke out in May 2023. Let's listen into a slice of what the Prime Minister had to say about the Indian economy.
Our economy has seen a growth of 7.8% in the first quarter of 25-26. It means India is the fastest growing major economy in the world. We are also seeing the growth of Make in India and exports.
All right, with that, it's time for us to slip into a short break. Don't go anywhere after this. We'll get you more updates on the market. Stay tuned.
Hi there, welcome back to ET. Now you're watching Market Cafe with me, Kanishka, Sarkar and Ankita, Saxena. Well, let's talk about the Indian markets now. Now, the Indian equities ended on a positive note last week with Nifty firmly above that 25,100 mark on Friday. The Street ended the week with 1.5% of gains. The broader markets, they also reflected strength as both mid-cap and small-cap indices. They registered gains in the range of 0.3% to 0.6%. Now, the up move, that was supported by a mix of triggers. Corporate developments such as Infosys 18,000 crore rupees mega buyback, that boosted sentiment in the IT blue chips. On the other hand, strong inflows from domestic institutional investors offset continued selling by foreign portfolio investors. This, alongside positive cues from the global markets, that further strengthens the momentum in the Indian markets. Talking of sectors, now autos and ITs, they also performed well, whereas financials and metals, they extended their gains over the week. So that's how the Indian markets fared last week. But Ankita, which are the cues that we are watching out for later today?
A couple of cues that we need to watch out for in before today's trading session. We have, as far as India's macros are concerned, we have the trade data, the unemployment data, and the WPI data that is likely to come out as far as Indian macros are concerned. We do have a couple of corporate actions happening also. We have bonus issue eligibility. It is the last day to buy shares for Godfrey Phillips for a bonus, bonus issue. And also, as far as dividends are concerned, this is the last day to buy shares for Balmain Lorry, Dixon Tech, K. Kumar Infra, Karnataka Bank, and Skipper to be eligible for dividends. So it's the last day to buy shares for these companies as well. Also, we have a couple of other things as far as corporate action is concerned. These stocks will be trading ex-dividend. We have Glenmark Pharma, IGL, KNR Constructions, Landmark Cars, Phoenix Mills, Polyplex Corp and Texmaco that will be trading ex-dividend. And on the China front, we have the retail sales, the IIP number, and for Japanese markets, the markets are going to be closed today. So Japanese market will not be trading as of today, but from China we have the retail sales and the IIP numbers that are due. All
right, so those quite a few cues to watch out for today and later this week. But moving on, let's take a look at which are the stocks that we need to keep on our radar today. And Sharad is joining us now with just that list. Sharad, over to you.
As SEBI meet was concluded over the weekend, and it will be a negative reaction we are expecting for the AMC stocks, as SEBI stated that the maximum permissible exit load cut would be coming down from 5% to 3%. Positive news flow for BSE, CDSL, Angel One, and this might be a short-term up move, as SEBI had stated that there is no update to share currently when it comes to the extension of long-term derivative contracts, and SEBI has stated that this long-term F&O contract is a complex issue and they are still working on the same, and of course a consultation paper would come going ahead in the future. But for now, there is a relief expected in these stocks. Tata Tech, they're expanding in Germany with a $75 million acquisition of ES Tech Group, which is into automotive engineering, and from first year itself, the EPS attractive would be there for this deal. Adani Power also, they've signed a 25-year power supply agreement with Bihar State Power Generation Capacity. And also, interestingly, Star Health, we see the GI Council has backed the company, as they have assured that there is no policyholders any disruption, and the council itself slammed AHPI's unilateral threat to suspend the cashless services. So net-net, this would be positive for Star Health.
Alright, so these are the stocks to watch out for, but we have a second set of stocks that will be on our radar. Ashesha is joining us with all the stocks that you need to watch out for. Ashesha, take us through the stocks that you have picked out for us today.
Yes, let's start with Apollo Hospitals and two news pieces over here. One, the company said that they will be acquiring 30.58% stake. This will be acquired, and the stake is currently held by International Finance Corporation in Apollo Health and Lifestyle Limited. This will be done at a total consideration of about 1,254 crore rupees. And as a consequence of this transaction, then Apollo Health and Lifestyle will become a 100% subsidiary of Apollo Hospitals. So keep an eye out on this. But there's another news piece again with respect to Apollo Hospitals, where the company said that they will be setting up a comprehensive oncology facility. This will be in Gurugram with an investment of about 5,730 crores. So on the back of both these news pieces, keep an eye out on Apollo Hospitals. Meanwhile, Engineers India, where the company has won some new orders, the company said that they've received 618 crore contract for providing PMC services. This is for a new fertilizer plant in Africa. So some big order wins coming their way, and Engineers India will be in focus on the back of this. ICICI Bank, meanwhile, where RBI has given its approval to purchase additional shareholding to the tune of 2% in ICICI Prudential Asset Management Company. Voltas, Blue Star, Havells, and all of these white good companies will also be in focus, and this is because government has reopened its application window for PLI scheme for white goods. This will be applicable and open for a period of 30 days starting 15th of September, and it will be open till the 14th of October. Lastly, real estate players, Delhi-based players, the likes of DLF and Signature Global, positive news flow coming in for them because the UP government has removed height restrictions on residential buildings in Noida. So keep an eye out on these Noida-based real estate players as well.
All right, thanks Ashesha for taking us through all those stocks that are likely to buzz in today's trading session. But let's take stock of how the Asian markets have opened up. Now, it's a mixed bag coming in as investors are, keeping a watch on the meeting that's happening between Chinese and US officials in Madrid. Now, a slew of data is also expected out of China, so that's something that is also being tracked. Let's take a look at how the markets have opened up. First up, Hong Kong's Hang Seng Index, that's trading nearly 0.2% higher as we speak. On the other hand, Chinese market, that is the Shanghai Index, that continues to trade in the red. It's down about 0.1% as we speak at the 3,865 odd level. On the other hand, S&P ASX 200, that is the Australian exchange, that's also down about 0.2% at that 8,842 level. Meanwhile, Nikkei, that is Japan's Nikkei, that's closed for a market holiday today, but it did end nearly 1% higher on Friday. Apart from that, South Korea's Kospi Index, that's also continuing to trade in the green, up 0.2% right now, around that 3,400 level. So that's the kind of move that we are tracking as far as Asian markets are concerned. On the other hand, talking about the Indian Nifty, now Nifty did manage to close above that 25,100 mark on Friday, but today we are expecting flattish moves with a negative bias. Just about 34 points of a downtick is what we are expecting at the open. So yes, that's how a flat but negative start is what we are penciling in for the Indian markets.
Alright, with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll get you more updates on the markets. Stay tuned. Street estimates and well within the target inflation rate of RBI. The food inflation remains negative in the third consecutive month, while core CPI inflation remains flat in August. My colleague Rabinder is here to take us through the highlights of the inflation print. Over to you, Rabinder.
Well, India's CPI inflation rose to 2.07% in August 2025 as compared to estimate of 2.11% in August 2025, which was up by 46 basis points as compared to July month. And India's inflation rose in August due to higher prices for vegetables, meat, dairy, and oils. And India's food inflation stood at minus 0.69% in August, which was up by 107 basis point month-on-month basis. And if we talk about rural and urban inflation, then rural inflation rose to 1.69% as compared to 1.18% in July, and urban inflation in August month increased to 2.47% as compared to 2.1% in July. And if we talk about housing, education, health, transport, and other inflation, then housing inflation reported at 3.09% in August as compared to 3.17% in July, and education inflation was at 3.6% and health was at 4.4%. And if we talk about fuel and light inflation, then it was at 2.43% in August 2025 as compared to 2.67% in July. And if we talk about the top 5 major states with higher inflation year-on-year basis in August 2025, then Kerala was the top at 9.04%, Karnataka was at 3.81%, Jammu and Kashmir 3.75%, Punjab was at 3.51%, and Tamil Nadu was at 2.93%. But despite the August uptick of India's inflation is hovering close to RBI targeted inflation band of 2 to 6%, and the central bank last month forecast CPI growth of 3.1% for the fiscal year ending FY26. And remember that RBI has lower interest rate by 100 basis point since February 2025, and the next monetary policy decision is scheduled to be held on October 1st.
All right, thanks, Rabinder, for all those details. Now, inflation has risen in India for the first time in 10 months, with food inflation remaining negative. Now, let's listen into what Aditi Nair of ICRA had to say about the same.
Broadly, the trend in the last few months has been a very low momentum as far as the food inflation is concerned, especially when you put it in the seasonal perspective. So typically you see food prices becoming a lot more expensive over the summer and the rainy months, and broadly that momentum has been very slow for most categories this year. So a big part of the low inflation readings that we've been seeing in the last few months is really coming because of the base effect, A, and because this year, in general, the food price inflation has been very low. Broadly, reservoir levels are very, very full. That's something that again gives us a good amount of insurance in a sense for the Rabi crop to kick off in a timely manner. So all of these factors are very supportive for the food inflation momentum to remain low going forward as well. And we don't expect food inflation itself to become a big issue in the near term. And it's mainly going to be the unwinding of the base effect that is optically going to lead to the inflation rates rising over the next few months, especially for food items.
And now moving on from India's inflation print to a move that is aimed at boosting the capital markets that has amended its regulations to simplify the process for large companies launching IPOs. Now, SEBI has announced that companies can now proceed with IPOs involving relatively smaller equity dilutions. SEBI has also lowered the maximum permissible exit load that mutual fund schemes can charge from 5% to 3%. Also, mutual funds have been allowed higher participation in REITs and invests. Listen in to what SEBI chair had to say on the F&O front.
हमने ये कहा था कि जो हम उस पे यदि हम विचार करेंगे तो विचार में समय भी लगेगा क्योंकि कॉम्प्लेक्स इशू है, इसमें कई सारी चीजों को बैलेंस करना है और उस इशू के बारे में हम कैसे आगे बढ़ सकते हैं यदि हम लोग अपने आप ही खुद क्लियर नहीं होंगे अभी डिफरेंट ऑप्शंस में, तो हम कैसे, हमने कहा था कि हम कंसल्टेशन पेपर लाएंगे. द extent provisions presently permit a maximum exit load of 5%. And reducing the maximum exit load would align the regulatory requirement with the prevailing industry practice. So therefore, it is proposed that the exit load of the open-ended scheme may be lowered to a maximum permissible limit of 3%. Expenses towards incentive for new inflows from B30 cities are not charged by AMC to all schemes uniformly. The existing structure where incentives are based on a percentage of daily assets was prone to misuse and churning of investments by distributors. So therefore now, to clarify, the distributors now will be additionally incentivized only for investment inflows from new individual investors from B30 cities, that means new PAN. At the industry level, capping of such additional incentive at 1% of the first application amount if the investor remains invested for 1 year in case of lump sum and total investment made during the period of first year in case of SIP, and the maximum amount of incentive is 2,000 rupees.
All right, but moving on, Ankur Mishra, my colleague, is also here to take us through all the highlights of the new norms that SEBI has come out with respect to IPOs, mutual funds and influencers. Ankur, over to you.
Yes, the SEBI board has approved the extended timelines for MPS norms as well as minimum public offer relaxation has been provided in the board meeting. Now, these are the categories which has been created between 50,000 to 1 lakh crore, 1 lakh crore to 5 lakh crore and 5 lakh crore for what it will enable. It will enable the large IPOs to have these extended timelines. For instance, the 5 years MPS has now been granted that there will be 10 years which may be given for large IPOs, especially when the 15% of dilution is already met and thereby the 10 years has been given. Apart from that, the anchor investor framework has been amended to include insurers as well as pension funds. What is happening till now that anchor reservation limit has been raised to 40% and which was earlier 33%. So this will enable pension funds as well as insurers to have more representation as far as the anchor investors are concerned. Apart from that, the amendments to LODR on related party transactions and scale-based thresholds have been approved in the board meeting, and more than that, the Swagat FI single window has been now approved by the SEBI board, which concluded on Friday. There were important comments which came in for NSE IPO as well, and the SEBI chairman has specified here, yes, NOC is expected very soon, and on FNO longer term contracts, the SEBI chairman has offered the comment that there is nothing new which he has an update on, while the consultation paper he has already mentioned earlier on 21st of August that will be done, but for now there is no new development which has happened so far.
Moving on then, SEBI's latest measures are set to shake up the markets with a mix of winners and losers. Reliance gets a boost from eased IPO norms, while the brokerages like DAM Capital and Edelweiss benefit from the relaxed anchor investor rules. Mutual funds AMCs face a hit as exit loads are capped at 3%. My colleague Sharad is joining in with a complete impact analysis. Take it away, Sharad.
Well, there was a very important board meet on Friday where SEBI chairperson had actually spoken about the entire capital markets, and there are bits and pieces from the release, but the impact should be coming in. And firstly, it will be positive for Reliance in the proposed dual listing, as SEBI has actually eased the norms for large IPOs and they've eased the timelines for minimum public shareholding. So we might see some action in the initial trade with Reliance. Apart from this, also looking at the investment bankers, DAM Capital, MOSL, JM Financial, Edelweiss, SEBI has eased the IPO anchor investor rules, which might increase FPI participation as well. Slight negative news flow coming in for all the AMC stocks, as the maximum permissible exit load cut has been reduced from 5% to 3% Mixed impact coming in for the distributors, and focus is Prudent Corp. The positive thing is, of course, they are introducing additional commission to onboard women investors, but the distributor incentive is now capped at 1% of the first year investment, or maximum of just 2,000 rupees per investor. BSE, CDSL, Angel One, capital market theme stocks, they would be coming positive as longer term FNO contract, the SEBI chairperson has stated, it's still a complex issue and they are working on the same. There is no update coming in to share currently, and that is the news break confirmed also, which came from ET Now, as well as there wouldn't be any adverse announcement regarding the FNO expiry, and that same happened on the meeting as well. Mindspace, REIT, Embassy, Brookfield Nexus, these are all REITs, but a positive news flow as there is a reclassification allocation of REIT coming in as equity for mutual funds. So these REIT units might also buzz positively in the trade today. And lastly, K Fintech and CAMS largely could say neutral to positive reaction could be there, as there's an introduction happening for activity-based regulations for RTAs, and the services for unlisted companies, however, won't be still coming under the regulations for SEBI, and it will be a separate business unit. So net for the entire ecosystem, there is a positive flow coming in from SEBI board meet, but of course there is a cause of concern still remains, especially for the broking players when it comes to the F&O expiry contracts.
All right, so that's about the impact analysis as far as SEBI's new norms are concerned. But Sharon, before we let you go, Nuvama has also run the numbers on possible expiry format changes for derivatives trading and their impact on BSE. Now, across scenarios, market turnover could fall 48 to 67% with EPS cuts for FY27 as well. Now, despite the earnings risks, Nuvama has maintained a buy on BSE, citing long-term structural positives. What are the other details that you're picking up?
There's been a lot of what-if analysis and scenario analysis over the last 1 week regarding BSE when it comes to the F&O expiry contracts, and of course the tenure is something which the street is looking out for. But currently nothing major coming in from the SEBI board meet, but for the second straight week actually BSE has actually surprised everyone, as there hasn't been any major change when it comes to its market share despite the expiry days changing with NSE. But Nuvama has come out with an interesting scenario analysis, and of course assumption is that all data is compared as per their FY27 estimates. And the first scenario is that if there is a different day expiry, Tuesday, Thursday, fortnightly expiry, then the ADBTV, that is the average daily premium turnover, that's expected to dip 48%, and BSE's market share would be only 20.1%. Also, now this implies a roughly 27% EPS cut. The second scenario is a different day, Tuesday, Thursday, monthly expiry, which will be limited to mid-month and monthly end expiry. We're expecting the turnovers to actually cool off by 67%, and BSE will have just 16% share. And overall, the EPS downtake would be coming in of roughly 37%. The third scenario, that's a mid-month or an end-month alternating expiry. And in this, the contracts will be literally month-long, but the expiries will have a 2-week gap up. Over here, the average daily turnover premium would come down to 54%, and the market share would be rising to 27.5% for BSE. And also, there would be a cut, the minimum cut of almost 20% in their EPS going next year. The same day, fortnightly expiry, the fourth scenario, exchanges shall have the fortnightly expiry, but the expiry date remains the same. Over here, we are expecting a 32% cut for EPS, while the average daily turnover of the market might fall to 48%, with BSE's market share falling to by almost 66.3%. Now, same day monthly expiry, the last scenario analysis. Over here, the average daily turnover expected to come down by 54% and almost a 39%. That's the highest range in our scenario analysis when it comes to BSE's FY27 EPS. Net, Nuvama's final take is still like they are having a maintained buy rating with a target price of 2,820 odd rupees. But do remember, take all these scenario analysis with a pinch of salt, because clarity has still not come.
And well, the 77th Primetime Emmy Awards kicked off with Apple TV's shows The Studio and The Severance dominating early wins. Seth Rogen scored lead actor in a comedy for The Studio, while Britt Lower claimed lead actress in a drama for Severance. Jane Smart took home lead actress in a comedy for Hacks. In supporting categories, we had Severance star Trammell Tillman and Hacks Hannah Elben also grabbing trophies.
All right, so that's the latest update we are getting from the global end world. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. With the General Insurance Council asking the Association of Healthcare Providers of India to negotiate constructively, ensuring that uninterrupted care for patients is ensured. My colleague Anurag Shah is now joining us with more insight into this whole affair.
One more time, TESL between hospitals and insurance company. This time AHPI has issued a notice to Star Health Insurance Company to discontinue cashless treatment for their policyholders. In their statement, AHPI has mentioned that Star Health has not revised their tariff rates and there is no agreement between hospitals and Star Health. So from 22nd of September, they will not be giving cashless treatment to Star Health policyholders. On the other side, General Insurance Council hits back to AHPI. General Insurance Council is a body of insurance company. So General Insurance Council has supported Star Health and given assurance that there will be no disruption for Star Health policyholders. And General Insurance Council has mentioned that these are the pressure tactics by Hospital Association, and in the routine talks, patient should not suffer, the patient care should not suffer, and dialogue can be continued and issue can be resolved. And General Insurance Council has also urged AHPI to continue the dialogue with Star Health and resolve the issue and take back the notice of withdrawing cashless treatment for Star Health policy holders.
Well, let's move on to some news fatafats then. After a visit to Northeast, Prime Minister Narendra Modi will be in Bengal today, where he will inaugurate the 16th Combined Commanders Conference in Kolkata. He will then head to Pole-bound Bihar to inaugurate the new terminal building of Purnia Airport. He will also inaugurate the multiple development projects worth 36,000 crores. Also, moving on then, Supreme Court is set to pronounce its interim order on over 100 petitions challenging the constitutional validity of the Waqf Amendment Act as of today.
Supreme Court is set to hear a batch of petitions today challenging the Election Commission's decision to conduct a special intensive revision of electoral rolls in Pole-bound Bihar. Mumbai experienced overnight rain with thunderstorms occurring after midnight on Monday. South central Mumbai received intense rain in the past few hours. Meanwhile, the IMD has issued a yellow alert for heavy rain for today, accompanied by more thunderstorms throughout the day. The warning will remain in place until Tuesday.
All right, so those were the news fatafats. But before we wrap up, let's quickly take stock of how Asian markets have opened up. Asian markets are trading mixed actually, as investors are keeping an eye out on the US and China meeting in Spain. And a slew of data that is awaited from Beijing. Now, remember, US and Chinese officials have begun talking in Madrid from Sunday, and they will be discussing key important things like national security, economics and the trade issues, including the upcoming deadline to divest China's short video app TikTok and the US tariffs. Now, on the back of that, that is something that we are watching out for. The Asian markets have opened up mixed. ASX 200 trading down 0.2%. Hang Seng is up 0.4%. Kospi is up 0.2%, and Nikkei as of now is trading with gains of 0.8%. So that's how it is panning out. With that, it's a wrap on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.